Hello everyone, I am Manik Aggarwal and today I will tell you a brief introduction of mutual funds. Mutual funds are subject to market risks. Please read all schemes related documents carefully before investing. Why this line is repeated again and again while investing in mutual funds? Because when we invest in mutual funds, our money is invested in share market. Therefore, there is a risk. So reading all documents before investing makes you a little more aware about the mutual fund. Here are some of the basic questions regarding mutual funds like what are mutual funds, how mutual funds work, how to invest in mutual funds, what is SIP, types of funds, top mutual funds for 2018 and where we can invest. As everyone wants to earn extra money and invest their savings in a good place to get good returns. So some people invest in bank saving account, FDs, gold or share market and some remain confused, but the best option is mutual funds. Here are some of the points that will help to understand more about mutual funds. First of all, no demat account is required for investing in mutual funds. It has very low risk. It can be made by monthly investment plan through SIP, that is systematic investment plan, which is as low as rupees 500 per month. You will have to fulfill eKYC criteria at some bank or with an AMC, that is asset management company. And investing in mutual funds means investing in share market because money is invested by highly qualified fund managers in share market. You just need to invest in good mutual fund. If you have no knowledge about share market or very less knowledge which is not sufficient for the trading and get good returns, at that point we invest in mutual funds. Now let me tell you how mutual funds works. As the name indicates, mutual means together. Some people mutually give their money in a fund house. They pool their money in the fund house. A highly qualified fund manager is appointed to manage those funds, that is, to invest in the market in various companies. After that, when investment yields returns, then fund manager charges its fees or commission to 2 to 2.5%, and the rest is distributed to the fund providers, that is, investors, proportionately. Now here are some various types of mutual funds, which are equity funds, debt funds, balanced funds, large cap funds, mid cap funds, small cap funds, open-ended funds, closed-ended funds, and tax-saving mutual funds. Equity funds are those funds in which money is invested in different equity shares in different companies. It has high risk and high profits. Debt funds are those in which money is invested in different debentures of different companies. As the risk is low, thus the profits are also low. Then balanced funds are those funds in which money is invested in both equity and debentures. Here risk is moderate and returns are also moderate. Now large cap funds are those which have a market capitalization of more than 4,000 crore, for example TCS, Reliance Industries, etc. Mid cap funds are those funds which have a market capitalization of more than 250 crores but less than 4,000 crores. For example, Century Textiles, Bajaj Finance. Small cap funds are those which have market capitalization of less than 250 crores. For example, Bajaj Capital, HDIL. Now here are some parameters from which we can better understand about large cap, mid cap and small cap funds. In case of risk involved, large cap has low risk, mid cap has moderate risk and small cap has very high risk. Rate of return is low in large cap, high in mid cap and very high in small cap. Liquidity is very high in large cap, high in mid cap and low in small cap. And the institutional holdings is very high in large cap, high in mid cap and low in small cap. According to this triangle, we can see that small cap companies have a lot of opportunities to grow as the area in small cap is the largest. Likewise, the mid cap companies have less opportunities as compared to small cap but are more developed than small cap. And the large cap funds have very less opportunities as the area in the triangle shown here is very less, but since it is at the top, they are the most developed companies. Open-ended funds are those where we can anytime sell and purchase the funds. It is therefore flexible. Closed-ended funds are those which we have to hold till maturity and can't sell in between. Taxable funds, that is ELSS, that is equity linked savings scheme, have 3 years lock-in period. It has high risk and high profit, and it also have a deduction available under section 80C in the Income Tax Act. That is why it is a tax saver fund. Now here are some of the points to keep in mind before investing in mutual funds. We must have complete analysis of the fund, checking the previous trends of that fund, returns which the fund was giving previously, about the fund manager who is appointed for investing in share market, his qualification, experience in the field, etc. Any fees or expenses for initial investment, and taxability laws for the returns. Now here are some of the top mutual funds for 2018 where we can invest. Firstly, large cap equity open-ended funds. Number 1, IDFC Focused Equity Fund with CRISIL rank 2, and the rate of return for previous year is 56.3% and the previous 2 years is 27%. Second, Reliance Vision Fund with CRISIL rank 3. Rate of return for previous year was 42.2% and for the previous 2 years was 20.8%. Third, HDFC Growth Fund with a CRISIL rank 3 and rate of return is 36.6% for previous year and 21% for previous 2 years. And last, Kotak Select Focus Fund with CRISIL rank 1 and rate of return for previous year is 35.8% and for the previous 2 years it is 22%. Now secondly, mid and small cap open-ended funds. Number 1, L&T Engineering Business Fund with CRISIL rank 2 and 61.3% rate of return for previous year and 35% rate of return for previous 2 years. Reliance Small Cap Fund with CRISIL rank 3, rate of return for previous year is 58.7% and for previous 2 years it is 28.9%. L&T Mid Cap Fund with CRISIL rank 3 and the rate of return is 51.2% for previous year and 29% for previous 2 years. And ABSL Small and Mid Cap Fund with CRISIL rank 1 and the rate of return is 51.1% for previous year and 31.6% for previous 2 years. Thirdly, balanced equity open-ended funds. Number 1 is Reliance RSF Balanced Fund with CRISIL rank 2 and rate of return for previous year is 31.8% and for previous 2 years it is 18.6%. HDFC Prudence Fund with CRISIL rank 3, 28.5% rate of return for previous year and 19.7% rate of return for previous 2 years. ICICI Pru Balanced Fund with CRISIL rank 3, 27.2% rate of return for previous year and 20.4% for previous 2 years. L&T India Prudence Fund with CRISIL rank 1 and the rate of return is 27.8% for previous year and 16.7% for previous 2 years. And lastly, tax saving mutual funds. IDFC Tax Advantage ELSS Fund with CRISIL rank 2 and 50.7% rate of return for previous year and 35% for previous 2 years. Principal Tax Saving Fund with CRISIL rank 3 and 47.7% rate of return for previous year and 28.9% rate of return for previous 2 years. Tata India Tax Saving Fund with CRISIL rank 3, 42.5% rate of return for previous year and 29% for previous 2 years. L&T Tax Advantage Fund with CRISIL rank 1 and 40.4% rate of return for previous year and 31.6% rate of return for previous 2 years. Now in the quotes of Warren Buffett, never depend on single income, make investment to create a second source. Now here are some of the mutual fund companies where we can invest, like AIG Investments, Bank of Baroda, Pioneer, Benchmark, Bharti AXA, Birla Sun Life, BNP Paribas, Canada Tobacco, Daiwa Asset Management, DSP BlackRock, Edelweiss, Escorts Mutual Fund, HDFC, ICICI Prudential, IDBI, IDFC, ING, JM Financial, Kotak, LIC, L&T, Mirae Asset, Morgan Stanley, Motilal Oswal, PLS, Pramerica, Principal, Religare, Sahara Mutual Fund, Standard Chartered, Tata Mutual Fund, Taurus Mutual Fund, and UTI Mutual Fund. Thank you guys for watching this video. I hope you liked this video. So do like, share, comment to this video and subscribe to my channel. And I'll be back soon with a new video that is briefing about share and share market. Thank you.